Looking forward to seeing what's on your radar, what you're thinking here.
Sure.
With
Good
Dave.
morning to everybody. How is everyone doing today?
Good. Oh, you're on a day where we have a merger mania Tuesday, and great to have you back, Dave. It's been a while, so if you want to share your screen, there you go. All right, so metals are on your mind.
Yeah, absolutely. And Dale, thank you so much for bringing me back on. I really appreciate the time. And I feel like I'm among legends. You guys are very, very good at what you do. And I'm learning even in the couple of minutes that I'm on these mornings. I'm learning a lot.
Oh, well, thank you very much. That's our mission, to build up and edify traders every day. So, and that's why we bring in guys like you. We learn from everyone, Dave. So, I see your page there, and now you're featuring the Kiwi. Dollar's been fairly strong. Tell us what you're thinking. We had a couple of days of down in equities. Wondering what you're thinking there, and really across the board that you're looking at with your quotes. So
Sure, absolutely. Just to give the folks general context of how I approach things is I look at things from a longer term perspective, not necessarily on the hourly or the minute by minute chart, which a lot of the forex guys do. I look at things from a
they're
weekly
crazy.
perspective. Yeah,
They're going to
weekly
burn out.
perspective, daily perspective, et cetera. And I try to give myself context to the trades that I make based on what's going on longer term. So what I'm looking at right now, the biggest thing on my mind is the long term or the 10-year interest rate here, and how it impacts basically all the various different
Everything.
indices. Right, if the 10-year is going too high, too fast, then large cap tech is getting smoked, and tech in general. On the other hand, if it's going lower than markets are expecting, then you're seeing commodities getting smoked. And really, that's what we've had this year so far. Q1 was interest rates are rising pretty rapidly here. They really broke out around February, and then they rallied all the way to 1.76 on the 10-year, and then that's when commodities really took off. And then since then, it's been a bloodbath in many of the commodity names. I've been following uranium and precious metals. Right. Copper, they've all been hit, and frankly, it's not such a big surprise when you look at some of the charts. There's been, and this is actually small caps. And microcaps, as well as commodities, have all had negative divergences since roughly February. So price had been going higher, yet momentum had been dropping. And so it was a question of time when the rug would actually get pulled. So the question is, where do we go from here? Right? That's really what we want to know.
So uranium down from the highs by how much? 10%, 15% uranium itself?
The price of uranium actually is basically flat on the year. It's about $32 a pound right now, which is higher today than it was when it started 2021, which is
what was the high of the move, Dave? Before we dropped to 32, where were we at?
Well, so here's the thing: the price of uranium this year, the high was only $33 a pound, so it hasn't dropped much at all. But the underlying equities, had been so bullish, expecting the price of uranium to go above 40 and higher. Many of them traded at valuations with those expectations, and when those expectations weren't met on the time frame that many participants wanted them to be met, down came the sell-off. And then you had the frothiness, the momentum traders left the trade, and then you had basically you have a panic going on right now in the sector, and which presents some tremendous opportunities. From the peak to trough right now, assuming we're at the trough, nobody knows until after the fact. But peak to trough, the average uranium name that I'm following is down anywhere between 30 and 50%. So there's a huge potential opportunity if you have the long-term conviction and bullish thesis that I do to be accumulating. And that's precisely what we're doing with whatever dry powder we have, because I think we'll be having this conversation, Dale, hopefully in a couple months. And if so, I think uranium is going to be above $40 a pound. And so there's a huge opportunity. Sprott Resources, I'm not sure if you're familiar with those guys, biggest resource player. They just came into the uranium sector and took over the management of Uranium Participation Corp, or they they can buy pounds at the money with their ticker. So they went live yesterday, and so I think that's going to produce a major just momentum shift back in the positive for uranium. But that being said,
uranium is not the only physical market that's the shares have underperformed the commodity itself. It was happening in gold and silver. The metals were going up, and the miners were not. They were eroding, so oils, similar thing with that huge move up until the break we had in energy. Oils were underperforming. The oil shares were underperforming oil. So it's been happening across the board, and kind of reinforces that I think what you'd want to see is a little break in uranium and the stocks stop going down and starting to lead the way. I was always taught that your most bullish setup is the miners outperforming the underlying commodity rather than the other way around.
Absolutely. And that's what I'm looking for. I have a hunch yesterday may have been the day that the bottom might be marked. We'll see. I might have to back test it, but I think it all relates to interest rates here. So when I'm looking at the 10-year treasury here on the daily chart, notice what's happening. We had this uptrend since August, then we busted out in February, had kind of this rounding top, and now we broke down to the base in February, and we kind of overshot that gap. But notice right here is that momentum, even though it's very oversold at 29 on the RSI, is all the way back to March 2020 levels. And you're going to see that theme across the board. So I have a hunch that treasuries have bottomed here and likely are going to restart their uptrend. When you look at small caps also, this is the weekly chart. So all the way back to March. So we've overshot the 50 RSI to the downside, but I have a hunch that we've possibly hit the lows or very close to it. Can't say for sure, but if you look at the daily chart on the small cap index, notice where RSI is exactly the same level that the 10-year treasury is on the daily. In other words, back to the March 2020 lows. So whereas a lot of folks are talking about a potential breakdown in small caps and commodities and move back into deflation, that very well may be the case. I have a hunch though that we're bottoming here in the small caps. What I've been looking for, Dale, over the last couple of weeks in the sell-off in small caps is when do small caps start outperforming the large caps? And we've started seeing it over the last couple of days and in some of the shorter term trading. And so yesterday was the first time on a daily close that it happened. And I have a hunch that it's going to start, that trend's going to start reversing to the upside. Now, if I'm wrong, it's possible that we do fill this gap here on a dip lower. But that's kind of what I'm looking at. If small caps, if you look at some of the underlying small caps, they're down 30% from the highs. And so
even the Russell 2000 is down 10%.
Exactly.
I mean, it hasn't made a new high since the end of March. It's one of the only indices not to make a new high.
Right. And it's been in a technical downtrend or in a momentum downtrend since February. So the question is, when do we bottom? A lot of folks are starting to talk about now is the time when the markets are going to have a major sell-off. Maybe, but I don't see it because I think the underlying sell-off has already taken place. Most of the names in the S&P are down on the year, even as the S&P has done quite well, right, with the mega caps. Small caps with many of the names down 30, 50%. There's been a rotation underneath the surface where the higher quality names have withstood the negative downturn, but for the most part, the lesser quality names have gone down. And so the question is, perhaps now that trend is reversing the other way. And that's kind of what I'm seeing. I'm seeing a lot of healthy price action within the general equity markets. And now you've got earnings seasons coming in, and I expect that to be very strong. And if that's the case, I don't see a scenario where the markets have a heavy pullback. 3 to 5% possible always, and but we've already seen a 4% pullback on the S&P and the Nasdaq, 10% on emerging markets and small caps. So the question is, are we done? I'll tell you next time. But that's kind of how I'm saying things.
All right. Okay. So let me ask you this, since you started with yields. So the uranium and commodity stocks do better when yields are rising.
Correct.
Or falling, because I thought lower yields actually create more of an opportunity, less opportunity cost for buying something that doesn't have a yield.
Right. Look, there are a lot of factors that come into play, and perhaps what you're saying is true in the long haul. But in the short haul, yields are a reflection of what people's expectations of the economy and inflation and so on. And so the 10-year has been a reflection of the debate of transitory versus permanent inflation. And if things indeed are transitory, then perhaps demand is not as strong, perhaps growth is not as strong, and given all the stimulus, and therefore that's given those expectations, the general materials, the more industrial portions of the economy have been pulling back. But I don't believe it's transitory, and I think you're going to see a bigger push towards inflation into the end of the year, into 2022, and this has just been a healthy pullback.
Okay, why Shanghai? Because China's a major buyer of commodities. Is that why you keep an eye on it?
This is a great question. I don't have a clear answer, but I've been watching this Shanghai index for a long time. If you notice the rounded bottom, this is a chart since 2015. It's a rounded parabola, and if you look, we're completely at the apex here. And the question is, what Shanghai does here, I think, will be very, very critical to the rest of the global equity markets. If we break out, and I think the probability is quite high that we do, I think you're going to see a major move higher in not only equity names, but led by emerging markets, and emerging markets are very correlated to commodities as well, and the inflation cycle, and frankly a weaker dollar. So I know some of the shorter term charts, the dollar is looking quite good right now. It's been hitting some of the commodities, but this is the chart that I'm watching, and we've got very little to move to maneuver here. Either we break out or we break down, and I think this is going to determine the next 12 months of equity flows.
Okay. All right. Interesting. When China announced it was selling commodities, trying to break commodities, maybe we could take a look at what a uranium chart. Oh, you're going to pull it up now? A uranium chart?
Mm-hmm.
Or a uranium issue? Okay.
Yeah, so this is uranium issue.
Okay.
Yeah, so if you see here the URA, which is largely composed of the large caps, but it's got a lot of the micro caps in here as well. But this is heavily influenced by the Camecos and the Kazatoproms of the world. But notice what was happening as the price was going up in 2021, higher highs. Momentum kept making lower highs, and then eventually it broke down. But this is how we trend, and so now we've been in a downtrend since basically middle of June, according to the URA. Most stocks have been down earlier than that. And I think we're approaching this 18 level of support. Whether or not we hit it, I don't know. But we've, for most stocks within the sector, they've breached their 200 daily moving averages, and are down over 40%. So when I say most stocks, I'm talking about more of the micro caps, the juniors, not the majors. But bottom line is, I think there's an opportunity here to accumulate quality names, and that's what we're doing.
Okay. Next.
Yeah, another interesting chart here is Glencore. Glencore is basically one of the major players in the commodity space, and they've also sold off since roughly May of this year. And I think we're coming in at support around that 790 level. Notice RSI is back to the 50 level, which is where the previous breakout occurred back in November. And that's kind of what I'm looking at right now. So if this is indeed the end of the sell-off, then we're going to have a really bullish second half of 2021 for the commodities, but in general, towards equities, towards value, towards industrials, the financial sector, I think is going to do well under a higher interest rate environment.
What's the commodity that Glencore mainly mines? Is it copper?
It's copper, and I think it's iron ore. Not 100% sure, but I think iron ore is the primary, and then there's copper. Certainly playing as well. So we had kind of a double top here from 2018, but I needed a while to kind of consolidate wins, and I think that's what we're doing right now. And
are you familiar with Denison Mines? One of our attendees is asking.
Absolutely.
DNN?
I've been following Denison very, very closely, and it's been hit. So let me see if in the interest of time, I'm not going to find the other chart, but Denison here right now is interestingly back to, so my charting methodology is I look where momentum was on the previous breakout. So if you go down all the way to this November, December, when we broke out back in 2020 from about 40 cents around these levels, RSI was around these levels. Which is around 40, 44. We're back to that level right now. So I would not be surprised. In fact, I think there's a high probability that we're bottoming here. Now, can we dip lower? I think that the 200-day moving average is around 85, 86 right now. Can we dip lower if there's another market flush? Sure, we can towards this level. But I think we're in the last tranche of the sell-off. And I think we're going to see a rally over the next couple of days. I noticed that this stock is being shorted right now, and a lot of algorithmic trading is keeping it down. But when that covers and when the trend reverses to the upside, I think Denison is going to be one of the best performing miners. I personally don't like it as much relative to some of the other names due to its high dilution and so on. But as a barometer on the general uranium space, this chart is basically what's been happening in the sector. So from a high of 150, we've had about 7 straight weeks of down price action. But shouldn't surprise us because look at this. We had a higher high, and then since then, momentum could not follow through. And once we could hit this Fibonacci level, down we went.
Okay. Any view on a couple copper stocks like Freeport and Southern Copper, SCCO? Do you know those issues? Everyone knows Freeport, of course.
Yeah, exactly. So I think Freeport is very close to the lows as well. Let me pull up the daily here. I think that's going to show something. So notice what's happening on the daily. Where is RSI? RSI, not only are we double bottoming right now with positive divergence, so we had a lower low here and we bounced with a hammer yesterday, but also RSI is exactly at the March lows on the daily chart, right? And I bet you if we take a look at what was the other CCCO?
SCCO. Southern Copper.
Certainly follow it on my copper watch list. So that's a little bit stronger, which is great. You certainly want so I don't see a lower low here, but that's totally fine as well. I think this is going to be a level where it may very likely bottom as well. I have been following the copper on our weekly reviews, copper miners, as well as the price of copper. And I've been noticing there have been signs of bottoming. And so, you can't ever time a bottom perfectly, but I think we're pretty close. Here's COPEX, the copper miners ETF. Again, we've got a lower price that was hit yesterday. Momentum did not confirm, which is what you want to see. And again, momentum is back at the levels of March 2020. You're not often going to find a situation where the price has consolidated very nicely, kind of a bullish flag, but momentum has completely sold off. And it's kind of recharged its batteries, and I think it's going to go sooner rather than later.
Just an observation I have, because I follow a lot of the gold and silver miners, that industrial commodities like you're showing copper, uranium, have held up much better than the precious metal miners.
Yeah.
Any reason for that?
The precious metals it's such a complicated trade. It's well above my pay grade to try to understand that. I mean, ever since the Jerome Powell speech, the expectations were that gold was breaking out on almost every technical time frame and in June, and then you said
Failed.
something
Yeah.
and things, right, it was a failed breakout. And I think we're probably fairly close to the lows. I've seen a lot of places, a lot of charts that say we're pretty close to support. I just don't see it yet. So I wanted to build a base around these levels and give me a little bit more conviction to go long, back long the precious metals. Gold has been holding on pretty strongly, but silver hasn't,
Yeah.
and that's concerning. Like you said, you want to see kind of the more volatile names lead the metal. So I want to see silver lead gold, and I'm not seeing it right now.
Yeah. You won't see it for a while.
Yeah,
Okay.
and then finally, just want to touch on dry bulk shipping. We've been speaking about it because I think it plays into the commodity narrative. Notice here as well, since roughly May, we haven't been making a new high on the bulk dry shipping ETF, even though it was one of the best trades of the year, right? From a low of roughly $7 to a high of 30. Then it sold off, tried to break out, couldn't do it, and down we went. But we've got this bullish wedge here, and it's starting to break out as well from that wedge. If it can be confirmed, that could be a good indication that essentially bulk shipping, which is in my opinion, leading index for the commodity inflation trade. You see, we've bottomed here the last couple of days at RSI support levels. So let's see if there's some continuation over the next few days to confirm my thesis here.
Okay. Have you ever taken a cruise on a dry bulk shipping ship? I'm not sure. Have you ever tried it? I mean, maybe you get good rates, especially with COVID and everything. Anyway,
I might take my wife to Hawaii on Monday.
You want to show us one uranium chart, Dave,
Sure.
before you go? I mean, your favorite, your favorite uranium chart. Okay.
My favorite uranium stock continues to be Encore Energy, due to a number of different factors. Management being the most important, I think, to the success of a company. And notice how this is a stock that we've been buying since the last couple of years at 10 cents, and now it hit a high of 163. But again, momentum hit a high back in December, and it's been going down ever since. Right. And momentum now again is extremely oversold and is back at the levels of where March 2020. So, and we happen to be at the base of that previous breakout starting in 2021. So we've retraced all the gains of 2021, and I think this is a major opportunity, major buy zone. Below this pink line is the 200 EMA. So below that level right now, I think if we get a reflexive rally, I think we can get a really big push to the upside sooner rather than later. And this applies across the board. I just like Encore due to its management prudence, but Denison will do well if Encore does well. Energy Fuels is another name that has a lot of fundamental reason to own it, but it's down 50% from its highs. So great opportunities, whether it's in uranium and copper, and I think soon enough in precious metals, but I'll withhold judgment on that for now.
Okay, well, another great commodity stock review by you, Dave. Really appreciate you coming in and showing us the levels, and I find it interesting how you look at because I do a lot with RSI levels in a comparative way to other turning points before we started heading up. So the best way for people to follow you, Dave, is it on Twitter at Moneyology?
Yeah, that's the best way. That's the way. Stay in touch with the community at moneyology.com or at Moneyology. Moneyology.com is the website. I'm not as active there. I'm just too busy with life. But at Moneyology on Twitter is the best way to follow me. And then, you can follow me on Patreon, but Twitter is really the way to go.
Okay, well, thanks again, Dave. You're my trading warrior brother, and I hope that the battle goes well for you until we talk again, perhaps in the fall. And it's nice to see the market sell off and give people a chance to buy things at maybe at least fair value, if not cheap, at least fair value. So some nice examples, and thank you for spending your most valuable currency, which is your time, showing our community what you're thinking and different issues that you're interested in. We all
It's very much a
appreciate it.
pleasure, Dale. I really appreciate the opportunity, and have a
Okay.
great week, everybody.
Yeah, have a great summer trading season, and let's talk again in the fall, Dave.
Look
Appreciate you
forward to it.
being here.
Take care.
Okay.
Cheers.
Follow Dave at Moneyology on Twitter. And, that way you could keep up with the different issues and see if there's even a little more deeper pullback. We'll see what happens. I think a lot of it's going to be index driven. There you go. Dave put up his Twitter handle. And that's a wrap for Turnaround Tuesday, everybody. Have a great day trading. You could join the team in 18 minutes on the morning edge. And don't forget to, not just trade be thankful for your stocks and your commodities and your currencies, but count your blessings too. And it's great to have Ryan as on the team. And we're only getting better. So everyone have a great day. Adios. See you tomorrow. You're welcome, Anthony.